Hello viewers, I'm Robin Pilley from CXG and I've just come to Shawbrook's head office and I'm actually in the office of the Managing Director Stephen Johnson, and I'm going to be proposing some challenging questions to him about the banking sector and how that obviously affects your property investment. So now, Stephen.
Hi Robin, how are you?
I'm good, thank you. So my first question, which I'd like to ask, is what do you actually think that differentiates Shawbrook from a traditional high street bank?
I think Shawbrook is a specialist bank. It's a smaller bank than some of the large institutions. We build our business on a desire to build personal relationships with our clients, try to be quite pragmatic and thoughtful, and we've been selective in the markets that we've chosen to operate in and tried to be deeply expert in those, so that when we do work with customers, they're dealing with a lender that sort of understands their markets and their challenges. So I think that very personal, sort of pragmatic approach has been well received by customers, and we've benefited from the growth as those customers have built their portfolios, as you have, and it's been well received.
Okay, thank you for that. One thing that obviously a lot of investors are concerned about is that we keep hearing, and that's been from Mark Carney, the Governor of the Bank of England, that interest rates have to go up at some point. He's been saying that for the last couple of years.
Yeah.
When that actually happens, which inevitably it will, what do you think the impact's going to be on the sector, the property investment sector, and you as a bank?
Sure.
Are you concerned about it?
Yeah, Robert, I think you're absolutely right. We have been in an environment of ultra low interest rates, and one of the risks around that is people get used to them. And clearly they've been very beneficial for the cash flow of investors and the economics of being a landlord. But they're not normal interest rates, and they will start to rise. I think they'll be gradual, which I think the economy will need, just as we start to get used to more normalised interest rates. What impact could it have? Clearly, landlords just need to be cognizant of it. They need to be thinking about higher interest rates and higher debt costs when they're thinking about their cash flow, to make sure they've got the headroom and they're not putting their cash flow under strain. As we all know, things happen with property. You have bumps in the road, you have tenant issues, you have property issues that can come to pass. The key thing is always just being very thoughtful about actually what level of interest rate could I still service comfortably with my cash flows from my portfolio. Clearly there are options around fixed rates, which give some certainty, but clearly for me, landlords just need to be thoughtful about how much debt they have, how much debt they take on, and when you're doing that, just think, if interest rates were 3 or 4% and I was paying a couple of points higher on my debt, would I still be comfortable? And I think that's the sort of thought process people need to go through. What will happen? I think it could dampen prices a little bit, could dampen activity a little bit. We've obviously seen capital values accelerate faster than rents in most places. So we are seeing yields come down. And if you think about it, as yields come down and interest rates go up, they're both moving in opposite directions and make it harder for the economics and the cash flow to work. I'm sure we'll come on to talk about changes to tax relief as well, which will impact the sort of cash flows. So we've always been thoughtful about that and have encouraged landlords to sort of say, look, we are in a very benign environment. Interest rates can only go one way. Now, they have been lower for longer than everyone anticipated, but the economy continues to improve, sentiment and confidence continues to improve, interest rates will start to step up. So just be thoughtful about it.
Mm-hmm. One thing that a lot of people feel that they can do to mitigate those tax relief changes is to purchase in a company vehicle, a company.
Yeah.
And most lenders, or a lot of lenders, aren't so happy with that. But what's your take on that with Shawbrook? Because that's going to become a request more and more, I should imagine.
So at Shawbrook, we've always been focused on the professional landlord community, and that's always been the clients that we serve. On average, half of the clients that we deal with tend to put their portfolios in company structures, so we're well used to doing that, and that's a core part of our service. It lends itself to how we operate. We have in-house legals, we have manual underwriting and quite sophisticated underwriters, so we're used to dealing with the more sort of complex structures. You're right, that's not true across the whole market, and being honest, in retail buy-to-let, where you'll get your cheapest pricing, it's vanilla and it's straightforward and it's individuals only generally. In terms of the considerations for landlords, it's not just as straightforward as thinking about sort of income tax. There are other taxes, clearly. You have capital gains tax to consider, you have inheritance tax. So there are a number of factors to think through, and depending on what your objectives are and what your strategies are, can influence whether incorporation is the right strategy for you moving forward. I think what this does is it just brings into sort of stark contrast the need for landlords to take proper advice from recognised professionals, and I think that's the key message. There are benefits in a limited company in terms of sort of income and sheltering potentially some of the tax relief on debt, but capital gains will be much higher in a limited company. You have to pay the corporation tax, then you have to pay tax on removing the profits from a company. So it's not quite as straightforward as people would say. The key message is make sure you take proper advice and you think about your long-term objectives, and then the advice can tailor the right sort of strategies for you.
Because often as an investor or a landlord or a developer, you see a site which you really feel you can improve and really enhance the value. And obviously the finance to make that initial offer traditionally has always been on a bridging loan.
Yeah.
But you've actually devised a product, something slightly different, which you give a short-term loan, a better rate in a longer period. But what was the thinking behind that? Because I guess for the bank, the risk is that you're giving someone a longer time, and if they don't develop, you may encourage people. I don't know. So you must have factored it out and thought.
Yeah, it's a really good point. So we've been in that market for 4.5 years. So we've been doing it pretty much since we started in our mortgage activity. The short-term loan, we called them short-term loans rather than bridging loans for a reason, because we wanted to target sort of the professional landlord, professional property community. Our sort of strategy was to introduce a more competitively priced product that was closer to the pricing you would see in mortgages and away from maybe some of the more traditional bridging price points, but we'd require sophisticated clients that have got a good track record, and we would try to raise, I guess, sort of the thresholds and the credit thresholds a little bit, because the bridging market serves lots of different spaces, and we were very focused on the professional landlord and property community. So we thought that through. We think the other thing that was helpful for us, it was a good opportunity for us to start a relationship with many of our landlords a little bit earlier in their buying cycle and in their investment cycle. Many of the clients that we serve, like yourself, would see opportunities to create some value, create enhanced rental streams, need to move quite quickly, do some work, and then they'll be looking to retain that for the long term, benefiting from the improved rents. So for us, it was an opportunity to help serve that kind of creation of the investment property with a view to offering the mortgage finance as well. The lending climate generally over the last few years has been very challenging. But Shawbrook itself has actually grown and expanded quite well. So what do you put that down to? As you know all too well, it's about kind of confidence of execution, the ability to transact, and everyone's time poor, and the opportunity cost of your time as an investor and as a businessman is probably the most expensive thing you have. So the bank's grown and continues to grow, and as we get bigger, we're able to be more and more competitive on pricing, and you'll have seen that. And we continue to get keener and more competitive, and so sort of the premium, the service premium that you're ending up paying is actually shrinking as well. So we think we're competitively priced and improve all the time, but we do think the service is differentiated. And
you touched on earlier, like the commercial HMO market. Again, it was something that lenders were a little bit nervous of, but it's really grown over the last few years, and I think you've become one of the market leaders. And you also kind of underwrite it a little bit differently, don't you? You kind of take in account the income that you feel can be generated. Now, again, a lot of investors look at the headline figures, and as you're saying, they feel that the income could be much more beneficial to them, but there are risks. So how do you, yourselves, balance that?
You're quite right. We've been quite thoughtful about the HMO market. We actually, not to embarrass you, invited you in to do some teaching and training and workshops with actually some of our underwriting teams, just so that we could understand what it's actually like to manage a HMO, the challenges you have versus a sort of more passive investment portfolio of single dwellings, and it is very different. So we've spent a lot of time trying to understand that market. We've always set our stall out to be a home for experienced landlords in that market.
Thank you for joining us. That was Stephen Johnson from Shawbrook Bank.